Bitcoin pumped 7% in the last 24 hours, rolling past 72,000 US dollars today, right in the midst of what could turn out to be World War III. What is the deal with that, right? Now, most commentators that I listen to around Bitcoin were convinced that crypto winter had already set in, speculating on a fall as low as $35,000 sometime this year before hopefully taking off next year. The US and Israeli strikes on Iran sent oil up. Gold is pretty steady. Silver holding its ground, pretty volatile though. And the S&P 500 is still holding its place as well. And from a New Zealand perspective, it all kind of feels a little bit distant. It all happens out there, right? But what happens out there eventually can and probably will flow through to our portfolios. So it does kind of matter. And in this short one, what I'm going to do is just speculate a little bit on some of the reasons why Bitcoin's moving right now. And I want to pose a question. Is the future price really set to follow the same historical 4-year price pattern, or is this time different? I'm Darcy Ungaro, a financial advisor here in New Zealand, and I work with everyday investors who want to think a little bit deeper about how money works, especially when geopolitics, technology, and when government and central bank induced inflation makes things hard to read. Now, in this one, I'm just going to be sharing 3 high-level thoughts on factors that could be pushing the price around right now with Bitcoin. And if you are on the fence with this asset, then stick around to the end to hear how you can get $20 of free Bitcoin for yourself. That's right, for free. Let's begin. Now, if you approach Bitcoin as a speculative high-risk investment and a way to grow a portfolio of a few things, then even a small amount can deliver good overall returns without betting the house on it. And you can also hold it, though, as a type of insurance to hedge against the disruption that will inevitably follow as digital transformation rolls through every part of our lives. For full disclosure, though, personally, I believe that Bitcoin is just a form of money. A form of money, of course, that has the power to change incentives and ultimately make the world a better place. So watching how the price moves is really just a way to gauge the rate of adoption. In my view, it's not about getting more money. It's about just understanding how the system is working. Bitcoin, like any form of wealth, doesn't care what you or I think of it. But studying it, I believe, can train you to handle volatility in any high-risk portfolio. So with all that said, on to the 3 reasons why the price may be pumping right now. First, let's talk about the war in the Middle East and how the fear is spreading. I'm not going to labor on this one too much, don't worry. But in the United Arab Emirates, wealthy expats and locals are paying eye-watering sums right now, sometimes hundreds of thousands of dollars just to secure last-minute flights and private charters out of Dubai and out of Abu Dhabi as tensions escalate. No one expected to see a drone hit a 7-star hotel. Charter prices from Dubai have spiked more than 500% in the last week, with some families forking over $150K for a single one-way evacuation to Europe. People are scrambling to move, and they're using efficient and new ways to shift their wealth as well, specifically Bitcoin. Now, I have a few friends that are based in that region, and the UAE has always kind of been seen as a bit of a safe haven in a part of the world that can get a little hairy from time to time. And I think it's a really interesting case study on how people actually react when war or something scary shows up at their front door. But if you're in danger, you've got to get out. But what about your wealth? Property? Pretty hard to pack that up and move it with you. Bank accounts? Investments? When you need to move money fast and you are digitally native, you kind of understand the options in front of you. Who do you trust more? A decentralized ledger where you can self-custody your wealth, or the increasingly gate-kept traditional system? Now, that might explain why outflows from Iranian exchanges like Novatex jumped 700% minutes after the strikes began. So when things get proper scary, a $2 million home isn't much good, but $2 million that you can quietly move over the internet sounds a lot better. So what's the takeaway in all this? Well, sometimes what we have thought is actually risky in terms of investment actually can turn out to be a safe haven form of wealth when it really matters. Now, before I go any further, there are a lot of reasons why the Bitcoin price can go up and go down. Sometimes it's clear and sometimes it's not clear. So these are all really just some of the many reasons that might be causing the price to change right now. But the second reason is Kraken just plugged straight into the Fed's payment system. It's the first crypto outfit ever to get a master account with direct FedWire access. Now, think of FedWire as the backbone for big money transfers in the US. Trillions of dollars move through it daily between banks. Now, normally crypto firms have to beg traditional banks for a ride and even just to get a bank account. And those banks can drag their feet. They can charge extra or they can just say no. So Kraken's banking arm now skips the middleman. Faster, cheaper settlements for big players and institutions. It's like your old dial-up internet finally getting an upgrade to fiber or even Starlink. Less friction means more traditional cash flows smoothly into Bitcoin and other digital assets. And why is this bullish? Why is this such good news for Bitcoin? Well, this isn't Bitcoin begging for approval from the old system. It's the old system quietly admitting that it needs to connect. And I've seen this firsthand. I heard of a client recently who fled South Africa. They had to move everything out and fast. The bank stonewalled them for weeks with paperwork and compliance excuses. Bitcoin, done in hours, no permission slips needed. The same thing's happening now in places like Dubai and Iran. People are scrambling with crypto because when it gets real, a decentralized wallet beats a frozen account. And this kind of touches on a theme that I've seen repeatedly: banks bullying those who want to buy crypto and those who are into Bitcoin. Some are doing a good job, in my view, because they're protecting people from scam risks. That's important. That's a risk that's increasing. But a lot of people are, in my view, being treated a little bit unfairly. And this Kraken move cracks that wide open. It's that sly, roundabout way that Hayek talked about, slipping better money in without a frontal fight. Institutions adopt it, they build the pipes, it drives adoption up. Higher prices advertise Bitcoin better than any ad can as well. We are all trained to think that we should buy low and sell high, but in reality, most people will only buy when they've heard that it's reached all-time highs. But more everyday people get exposure these days through ETFs or exchange-traded funds, or even with KiwiSaver nowadays, even if self-custody isn't for everyone yet. And that really is the gold standard. And that shifts power from centralized control to people who can steward their own wealth responsibly and do good things with it. So, in my view, this is just another sign that adoption is beginning to snowball from here. Now, the third reason why I think the Bitcoin price might be pumping a little bit right now is that it's just the way of big money, like hedge funds, for example. Plenty of sharp operators out there were short Bitcoin heading into the Middle East flare-up. Now, shorting's a straightforward scenario once you kind of understand the mechanics. You borrow the Bitcoin, you sell them now at today's price, and you hope to buy them back cheaper later on, pocket the difference after you've repaid the person that you borrowed it from. That's short selling. And it's a clean bet if you believe the price will drop. Except recently, the price didn't stay down. And after dipping to around $63,000 after the strikes began, Bitcoin bounced hard, clawing back thousands in hours and pushed past $72,000. The shorts started hurting and they had to basically buy that Bitcoin back before it started going up even higher, chewing into their profit. Funding rates went negative during this panic, meaning those positions were costing more and more just to hold. And as price climbs, the pain ramps up until they have to cover. Buy Bitcoin back to close out and stop the bleeding. That's basically how it works. And that buying feeds on itself. More shorts get squeezed, more forced purchases. The price then runs higher. This is the classic short squeeze, and we're right in the middle of one right now. It's hard to say if it'll keep going or it'll stabilize. It is Bitcoin after all, so it's probably by the time I release this video, it's back down to 62. Who knows? Now, I've seen this play out a lot of times. I've succumbed to this myself. I got tempted early on. I thought that I could fade the hype, and I sold. In my case, I didn't actually borrow coins to, buy back at a lower price. I just tried to sell at the top, thinking I could buy back when the market dipped. The market didn't care about my clever plan, though, of course. The price just kept on grinding up, and I had to end up buying that Bitcoin back at higher prices in the end. But that's human nature, right? The volatility pulls you in, makes you think you can dance with it or something. But most of us learn in the end, in the hard way, that trying to buy low and sell high consistently is a mug's game. I'm pretty sure everybody I know that got into Bitcoin or AI stocks, especially, tried to trade it. They tried to trade every wiggle that was out there, convinced that they could time it just right. Eventually, though, you realize that you're not actually smarter than the market, and you're better just to pick something that you believe has real staying power and hold through the short-term noise, kind of like what we're seeing right now. And that's why I think Bitcoin teaches you to be a better investor overall. You start dollar cost averaging a set amount each week, rain or shine, and you let time do the work for you. The old 4-year halving cycle, big bull, nasty bear, quiet rebuild, then a big boom. It has been reliable enough that plenty of smart people I respect are still calling for a crypto winter this year. And to be fair, they're possibly right, but I still like to keep an open mind about these things. And with spot ETFs live, a crypto-friendly administration in the US, and geopolitical risks pushing people toward anything that isn't more paper promises, it would be foolish, in my view, to assume this time can't be different. Markets punish certainty. The moment that you think you've figured it all out, the market changes the rules. Short sellers and derivatives do have their place. Of course, they help keep things honest and keep things well lubricated in the market. But for most everyday investors, myself included, it's closer to gambling than it is investing. Real conviction, if you can get it and develop it, means backing something that you understand and you believe in long term. Now, betting against people's natural desire to control their own money rarely will end well. We now have a choice to use a different form of money. Bitcoin adoption will not be a straight line. It will be messy. It will be volatile. It'll shake out all the lettuce hand holders, and only those who have steely conviction will be able to hang in there and actually build a genuine wealth. That's the ride that you have when you hold Bitcoin. So there you have it. 3 solid reasons, possibly the most solid reasons ever, why Bitcoin's pumping past $72,000 right now, even as the world edges closer to chaos. Capital quietly slipping out of danger zones via digital rails. New pipes like Kraken's Fedwire access, letting old money flow in with less hassle, and shorts getting torched in a classic squeeze. Could be any one of these reasons. It could be all 3. It could be other stuff that we haven't even noticed yet. The point is, nobody really knows what's driving the exact move day to day with Bitcoin. The old cycle feels useful, of course, until it doesn't. And right now, the world is throwing curveballs that don't fit neatly on any chart that I've seen. And if you've been sitting on the sidelines waiting for a better entry, hoping it dips back to $35,000 or whatever the bears are whispering in the corners, you're doing the same thing that overtraders do. You're trying to guess the top or the bottom, and it rarely works out well. Prove me wrong. I hope you can. And after all, it is your money. It's your call. But if you think Bitcoin has legs as real digital money for a more digital world, treat it like that. It's not a casino chip, but it's something worth building a quiet, boring strategy around, in my view. And this is exactly what I've done for 8 years now. Dollar cost average, a set amount each week, no matter what the headlines say. Hold it in your own digital wallet if you can. Self-custody is the gold standard for a reason. Let time and adoption do all the heavy lifting for you. Bitcoin's volatility is brutal. Most will not be able to handle it, but it is one of the best teachers out there. It shows you how emotion can wreck most decisions and how simple discipline usually wins. Now, if you've watched this far and you're even a little curious, do yourself a favor, head on over to SwiftX. Thank you, SwiftX, partner of this podcast, and sign up with my referral code in the notes below. Grab that $20 worth of free Bitcoin, get it into your wallet. Even if you think it's all hype or just not for you, $20 costs nothing to try, right? Stick it in a wallet, forget about it for a year, see what happens. Worst case scenario, you learn something. Best case scenario, you know what happens next, right? And if you want to talk properly about where Bitcoin might fit in your bigger picture, like how much, if any, makes sense alongside shares, property, and KiwiSaver, reach out. I'm happy to run through how I work without a sales pitch. And the same goes for tweaking your KiwiSaver for exposure to this asset class if that feels right for you. Now, quick heads up, I'm down here in Christchurch this weekend, actually, for the BitKiwi meetup. It's on Saturday, the 7th of March, 1 p.m. at the Ducks venue. If you are in the area, come say hello. Always good to put a face to the name and chew over this sort of stuff in person, hear from some really smart people that they have presenting there. So thanks for watching this one, and we'll see you in the next video.
A special thank you to our show partners who helped make this possible. Thank you so much. You're awesome. SwiftX and Provincia, thank you again. So, once you connect on social media, you can find me on X and you can find me on LinkedIn. Remember, some investment strategies or ideas can make you obscenely wealthy or wipe you out completely. It's hard to know from this end what's best for your world. So if you can, reach out for some advice that accounts for your own circumstances. That's it for this one. Catch you next time.